Welcome to Inside Healthcare with CEO and President of MagnaCare, Joseph Berardo Jr. Today he'll be discussing the broker's role in healthcare. What is the broker's role in helping employers choose a health plan?
Well, the broker's role in helping choose a health plan has been really something that's become much more important as health reform and some of the changes that are coming down the pike are starting to play out. So a broker is really an independent advisor that works on behalf of the employer or the plan sponsor. And given that there are so many choices, both on the fully insured side of the business as well as the self-insured side, it really becomes important that a broker spends time getting to know each intricacy of the plan. Stop loss, how are premiums paid, what are the coverage levels. So really they work on behalf of the employer to kind of independently evaluate which choice is better for that employer or plan sponsor.
What should a broker know about self-insured health plans?
Well, what's interesting is the market in which we serve, which is primarily New York and New Jersey, has really been a fully insured market, which means many of the employers that provide health insurance for their employees have been in what's called a fully insured relationship, meaning they pay a premium to an insurance company, and the insurance company is at risk for all the medical care and the claims that occur throughout the year. In the self-insured environment, that changes a little bit. The employer takes a little bit of risk, meaning that they fund out of their own cash flow the medical claims incurred by their members, but only up to a certain level, and then they're protected by what's called stop-loss insurance. So I think in this market, the reason that the brokers need to be educated is really because they're coming from an environment that's fully insured. And what we're doing at MagnaCare is we're holding a number of seminars, dinners, symposiums. We've written literature talking about a self-insurance guide for both employers and brokers to read to understand all the nuances of a self-insured plan. So a big part of what we're doing is really education to the marketplace on the benefits of self-insured programs.
What are the differences between fully insured and self-insured health plans?
The differences between a fully insured and self-insured health plan, in many cases, aren't that much at the end of the day. So what occurs is, in a fully insured plan, as I mentioned previously, the employer or the plan sponsor pays a monthly premium on behalf of each of their members. And whether the employees incur claims, of $10 or $10 million, whatever they pay the insurance company is what covers those claims. There's nothing that's owed beyond what they pay, and there's nothing that they benefit from should their employees not incur those claims. In the self-insured environment, what occurs is the employer takes an active role in the financing of healthcare. So the employer will in fact take a certain amount of financial risk at the individual member and at the total plan level in order to provide the benefits and basically finance healthcare. Now what happens is if it's a healthy population and they take care of themselves and they manage their disease states, they have the benefit of potentially spending less than what they budgeted going forward. However, if they have claims that are greater than what they had anticipated, they usually have stop loss in place, meaning an insurance policy at the individual level and at the overall group level that allows them to be protected from unforeseen financial risk. So really what happens in this environment is that if the employer's plan performs better than anticipated, they get the benefit of the cash flow back to the company. And they can in fact assume and predict the risk that they're taking in the self-insured environment. So it's in many ways it's been made to sound scary in the past, but it really, for the most part, allows them to still have a budgetable amount of money that they can forecast in a worst case scenario that they would spend on healthcare. And quite frankly, anything that's better than that comes back to the company in the source of cash flow.
What should brokers know about selling self-insured health plans?
Well, for a broker, I think it becomes very important that they start to really understand and include self-insured health plans as they shop for policies for their employers and their customers. And the reason I say that is post-healthcare reform has really forced a lot of health plans to start to look at self-insured plans. And the reasons being is that there's increased premium taxes that are being imposed on fully insured health plans. So there's a tax that could be 3 to 5% just tacked on to the health plan. There's mandates that are coming through both at the state and federal level that are required coverages that have to be part of a fully insured health plan. If they have multi-employers, if they have multiple states in which they have employees, they have to deal with the state mandates in each of the state, which could be different. There's no consistency among the health plan. So in the self-insured environment, what it allows them to do is it's self-insured plans are governed by ERISA, which is a federal act. There are requirements on various coverages that are still driven by the healthcare reform law that was passed last year. However, there's a lot more flexibility on what they want to cover, how they want to cover it, the financing of it all, wellness programs, claims information. There's just so much more information available as to what's happening and what's driving costs in their plan.
How does healthcare reform affect brokers selling employee benefits?
Well, the biggest change for a broker, and it's still out there for debate, is that as part of healthcare reform, there's been a requirement of the insurance companies to have 80% of the healthcare dollar be spent on medical costs, and 20% can be spent on administration, and that's for an individual policy. On the group side, it's 85 cents of every dollar has to be spent on healthcare and 15 cents on administration. So broker commissions have historically been part of the administrative expense, which is carried by the health insurance company. There's a lot of discussion out there to move that broker commission out of the administrative expense and have it be something that the employer and the broker negotiate directly. So they're going to be forced to justify the services that they provide. So brokers who add value, who get involved in helping choose the right health plan, who take an active role in having their customer manage their health plan in a proactive way, will clearly show value to that employer and be able to justify their compensation. So historically, brokers got a percentage of the premium. The premiums went up every year, so they got a raise. It wasn't terribly transparent, but in this new environment, everything's transparent, so those brokers who provide the most value and the best advice are going to be the ones that survive and thrive.